morning and welcome to IG's early morning call. It's midweek trading session. It's the 4th of October. Let's take a look at the headlines as we see the dollar-yen trade above 150 for the first time since October last year. A lot of discussion in the market as to whether or not the Japanese government and the central bank have intervened in the market. Certainly a bit of volatility in the cross as we've seen there today. Take a look at as well as what else is happening because we've seen first half results coming through from Tesco and it looks pretty positive. It's raised its profit outlook, reporting a 13.5% rise in first half core profit, 8.4% up here in the UK and Republic of Ireland in terms of its revenue. And oil, very much centre stage. We've got the OPEC Plus meeting today. It's expected to keep its supplies at the recently reported tight levels after Saudi Arabia and Russia continue to comment and suggest that there is the support for keeping supplies tight. Let's take a look at volatility. We are now up above 20, which I've always said and continue to maintain the view that anything above 20 provides that extra bit of volatility that traders like. And in fact, you can see here, we're at the highest level we've seen since the back end of May this year. So that push higher has seen traders go short on a lot of these risk markets and investors come out of risky assets and go into safer assets within the market. The London FTSE 100, you can see here in today's session, has dipped below the 76.4% retracement on this move here we got from the lows we had back on the 6th of September and the move up to 77.48 and the midway through September. So you can see this market now has price trajectory of 73.68. If you're short on this, continue to bring your stop loss down. And again, we continue to monitor this on the short trade throughout the last few days on the early morning call. And it's the same picture in the German markets as well. Yesterday, we closed out at levels not seen since the 27th of March. Today, we got a 26th of March print to 15,014. So the next line to watch out for is a break of the 15,000 level, taking us down to the 14,000. And that would then move us another step lower and take us then down to levels not seen since the 27th of March. And again, a continuation of this slide continues to benefit those short trades in the market where we're seeing a pickup on the downside. Same for the French markets as well. And that you can see there, the lowest we've seen since that intraday print back on the 24th of March, down at 69.72. So below the 7,000 level on the French CAC 40. So all of these aspects of the market showing that we've got this back up towards the volatility, pushing volatility up. We've got the short trade winning out across the board. And it's not just in the European markets, it's across the Asia-Pacific markets as well, where we continue to see negativity printed. And if we take a look at what we got in terms of some of the individual markets across Asia today, the Hang Seng stock index down almost 1.2%, 2% drop on the Nikkei at the close, and a loss as well on the S&P ASX 200. I do want to show you a couple of these charts to show you the strength of the loss that we've got and the strength in the Japanese yen, which we'll see in just a couple of minutes' time in today's trade or the last 18 hours or so. A lot of speculation. The Japanese central bank and the government have intervened in the foreign exchange markets to strengthen the Japanese yen. And this is pushing the Nikkei down. We are now approaching the 3,000 level. That would coincide with the 200-day moving average for the Nikkei. MACD pointing really low, indicating that the short trade continues to be a benefit. And if you are new to this trade, stop goes above the top of today's price action around about the 39.20 level. 30,387 is where we are. Price target 30,000. You get a dip below there. And then there's not really much stopping it all the way down to 27,430, which were the lows we had back on the 5th of April. Staying on the charts, just wanted to update you on what's happening around other regions. And indeed, if we get this close at the, we've seen the lowest close I think we've now seen on the Australian markets since November last year now. It's not quite as low as we saw that dip back in the 20th of March down to 68.28. But again, short trade winning out, MACD pointing lower, and it really is a question of just following this market down until we find some sort of support. In the last few days, we've broken below the 17,536 level on the Hang Seng. Don't forget that there is a holiday in the Chinese markets at the moment, all this week for celebrations. And that means that, I guess the volume's a little bit lighter maybe on the Hang Seng. But this is typical of all the markets at the moment where we're seeing lower lows with a print now down below levels there now not seen since the 20th of November last year. So a whole range of those markets on the way down. And this was also seen on Wall Street yesterday, where we got this market with a decline with the Dow Industrials losing some 400 points, down 1.25%. Same sort of percentage loss on the S&P 500. NASDAQ, by far and away the worst performer, almost down 1.9% in yesterday's trade. And if you look at the 24-hour markets, you can see on the IG platform, we've now got almost, I think, very close to the lowest print that we've seen on this market now since the 8th of June this year, as we see some of the air taken out of that. Well, let's take some of the frost taken off the market. I think that's a better way of putting it, because the NASDAQ, since the lows we had back in October, up more than 50%, 52.7% up to the highs that we saw on the 19th of July. So, as I say, just really a little bit of a move down. Where do we go from here? Well, it's difficult to see a bottom in the near future. I guess you've got to look at this sort of level down here. It was a sort of a level to watch out for. You'd have to pass the 200-day moving average if you were to drop below there. Let's just draw a fib on that, just to work out where that would take us to in terms of levels of support. There we go. So the fib at the moment is showing us we've got support kicking in at 13,948. Let's get rid of that. 13,948, 61.8% retracement, and that's around about the 14,000 level. So that would be your price target if you're short on the Nasdaq. The Dow yesterday picked up all the headlines because of the number of points that it's lost, as I say, 400 or 500 points or so. But if you've got to work out, this is a 32,800 point market. The big move we saw lower yesterday has taken us down there to levels not seen since the 1st of June this year. Again, it's just a question of taking some of the froth out of the markets at the moment. It is a steeper retracement than some had been penciling in. If we get a candle close below the 32,584, the next line of support down here at 31,430, which are the lows we had back on the 20th of March. So the dollar yen trade yesterday briefly rose above the 150 yen level per dollar on speculation the Japanese authorities and the central bank may have intervened to support the currency. Let's take a look at what's happening in terms of the moves that we've got, because I think there's a little bit of evidence to suggest that this possibly might have happened. This is the chart where we saw that peak yesterday above the level. We got a print of 150.16 at the high point yesterday, and then came a little bit of volatility. A couple of comments stoking speculation. The Japanese Finance Minister Shinichi Suzuki said yesterday that currency rates should be set by the market, and Masato Kanda, now he's the Vice Minister of Finance for International Affairs, also said he would not comment on whether Tokyo intervened in the exchange rate market. So there's a couple of comments. You take those as you find them. But I think the clue here is possibly in the volatility. Look at the extremes of the candle that we got yesterday. This, to me, gives you some sort of insight. If you look at the volatility we saw back in October last year when the market tipped over that 150 level, and then we got the confirmation that Japanese authorities had intervened, and then we got this pullback in the market. Now, where do we go from here? I think so long as the Japanese stay on the sidelines in terms of commentary, it's going to be more difficult, I think, to see some further downside for the dollar. In other words, strength to the Japanese yen. But if you look at what's been happening on an hourly chart, you can see, look at that. It all happened in 1 hour yesterday. And for me, that indicates potentially that the Japanese authorities did enter the market. That was at 3 o'clock yesterday afternoon, UK time. Since then, we've traded pretty much sideways on from that candle close, being supported by the 200-period moving average. This is an hour-by-hour chart, just to remind you. So going back to where we are on a daily chart, until we get confirmation as such that the Japanese markets are now actively intervening, I think it's unlikely we're going to see much downside. More so, I guess, possibly, maybe, we could well see another approach to the 150 level. 149.23. One of the big things that's really supporting this has been this rise in the US dollar. And that, for me, continues to be the trade. We got a peak above the 106.88 level yesterday, taking us to levels on the dollar not seen since the 22nd of November 2022, as we've seen higher yields push that dollar up, which means weakness for the Japanese yen. Outside of all this, we've been following up on what's been happening with two central bank decisions in the Antipodean region. Yesterday, it was the turn of the Reserve Bank of Australia, where it left interest rates on hold at 4.1%. And the Reserve Bank of New Zealand today coming in with their cash rate staying at 5.5%, a 15-year high for the OCR. The decision was in line with all 27 economists polled by Reuters. Also said that policy needs to remain restrictive to bring inflation to heel, but didn't go as far as suggesting further increases were on the cards, which is what we heard yesterday from the Reserve Bank of Australia. Quick update on the chart. You can see weakness for the Kiwi against the US dollar. Statement not as hawkish as economists were expecting, which sent that Kiwi dollar down against a whole basket of currencies. We're approaching this line of support at 58.60, currently trading at 58.81. You get a candle print below there. The next line of support to watch out for is then this level. Let me just quickly pull that up. Is that level there at 57.40 if you're short on the Kiwi against the US dollar. A bit later on this morning, we get some updated news coming through from the Eurozone. Retail sales expected out later on today to fall by 0.3% in August. Producer prices expected to rise by 0.6% in the same month on month, but heavily down year on year by a margin of 11.6% due to a base effect. Meanwhile, a little bit later on today in the States, we have JOLTs job openings, significant number in the context of the ADP out a little bit later on today. I'll talk about it in just a minute. But job openings unexpectedly rose for the first time in 4 months yesterday to 9.61 million, higher than the 8.8 million expected. Survey showed an increase in demand for workers in services. So today we've got job openings, the most in just over 2 years. Small businesses with less than 10 employees accounted for the bulk of the rise in job openings. Medium-sized businesses reported sizable increases, but the rise for large corporations was modest. The market now awaits ADP employment numbers out at 1:15 p.m. today, UK time. Job creations in the private sector expected to reach 153,000 in September, slowing from 177,000 in the previous month. Last month, most of these jobs, 154,000 of them, were created in the service sector. And on Friday, non-farm payrolls. Early expectations looking for 170,000 jobs created. The unemployment rate expected to fall to 3.7% from 3.8% in the prior month. Average hourly earnings coming in moderately up 0.3% month on month, 4.3% year on year. Let's take a look at how to trade this in the context of that stronger dollar. Yesterday, we saw the lowest print for the euro against the US dollar since the 30th of November last year, and there doesn't seem to be much let up in the downside technically for the euro. But I think much of what's going to happen over the next couple of days or so is dependent on whether or not the US is expected to see a continuation of the robust jobs growth that we have seen recently, which would go well to counter the weakness in the market here on this side of the Atlantic and the Eurozone, which would give you an excuse to continue to sell the euro against the US dollar. Let's switch into corporates. Tesco stealing the headlines this morning. Things looking pretty good, actually. This is the UK's largest supermarket company, raising its profit outlook. It reported a 13.5% rise in core profit for the first half of the year. These are the numbers as you can see them here. Sales excluding VAT, excluding fuel, 30.75 billion. Q2 like-for-like sales in the UK and Republic of Ireland up 8.4%. Adjusted operating profit, 1.42 billion. This was up some 13% year over year. Tesco Bank adjusted operating profit of 65 million. Now that was up 25%. Primarily, it says, driven by strong income growth, £250 million special dividend returning to the group of the bank, reflecting the strength of the bank's balance sheet. Interim dividend, 3.85 pence per share, should please investors. Quick update on where we are in terms of the share price. It's not been a pretty ride, actually. Let me just lift that line there up to, wait, there we go. That high we had there at 274 pence back on the 20th of September. This drop that we've seen recently continues to mirror the problems that consumers have, but I don't really see too much of that in the numbers out this morning. Tesco feeling fairly upbeat on where things are. The stock will open at 260. If you're long on this, your stock goes below the underside of the candle yesterday, around about the 256 pence level. If you're long on this going into the start of today's trade, I don't have a position on this, and that's not a trade recommendation, but it is a view on how things look, bearing in mind what we've been seeing today from Tesco. Let me stay on the charts and just update you as well on what's happening in Tops Tiles. I don't seem to have a Tops Tiles chart. Let me just bring up TPT is the ticker symbol, and we've seen this stock fall recently, yesterday closing seeing levels not seen since the 10th of July. Group sales in the year, approximately 263 million. This is a fourth quarter trading update. The third consecutive year of record turnover for the group, with sales now more than £40 million higher than prior to COVID. Year on year, sales increasing by 6.4%, which the company says we believe represents a significant outperformance relative to the UK tiling market. So it's thinking it's sitting pretty where we are, 48.3 pence again. Is this a stock that could well see a little bit of upside on the markets overall? That being said, don't forget that we've got indices down, which might give a little bit of pressure for those having to sell these stocks that are component parts at the FTSE 100 and the FTSE 250. But individually, things looking pretty good. Group sales at Topps Tiles growing by 3.2% in the 13 weeks to the 30th of September for that fourth quarter period. The comparative period last year contained a full contribution from Pro Tiler Tools. So the company's looking pretty good, I think, in overall sales. And potentially, I think we possibly could well see a little bit of an upside to that stock at the start there today. In the US, we're following up on reports that Reuters came out with just a short while ago, suggesting that Meta is planning to lay off employees today in the unit of its metaverse-orientated Reality Labs division, focused on creating custom silicon. The company is an interesting one to follow. I'm going to show you what's been happening with Meta Platforms. It's an all-session stock on the IG platform. We've hit this symmetrical triangle, if you can see here on the chart, where we've got lower highs and higher lows. Employees apparently, according to this report, were informed of the layoffs in a post on Meta's internal discussion yesterday. The post said they would be notified about their status with the company by early Wednesday morning. Reuters says it wasn't able to determine the extent of the cut to the silicon unit, which is called Facebook Agile Silicon Team, or FAST. If the cuts are deep, Reuters speculates, there's a potential to make the cuts curtail Chief Executive Mark Zuckerberg's project to build augmented and virtual reality products, enabling access to a set of what they say is an immersive virtual world known as the metaverse, something that Facebook has been on about for some time. So, interesting to see what happens. We don't know yet the extent of the job cuts, if indeed they happen, but apparently we could well hear details before the US markets open. And Angeline will follow up on this in Beat the Street at 1:30 p.m. today with a view on how Facebook is trading on the IG platform ahead of the open. Let's go back and take a look at what's happening now on the oil markets. One of the big features of what's been happening overall in the markets has been this rise in the price of crude. Brent continues to hold above $90 a barrel. We have seen a little bit of a move down recently. Yesterday, API reporting 4.2 million barrel fall in crude oil inventories. Analysts were expecting them broadly unchanged. Gasoline stocks rose by 3.9 million and distillates by 350,000. Now, Cushing inventories rising this week by a margin of 700,000 barrels. We were talking about the Cushing oil storage going down to recent lows, which is causing all sorts of concerns about the supply. Now, today, OPEC Plus will update us on the production guidance. No changes expected. The organisation is expected to keep supplies tight. Last month, Saudi Arabia and Russia decided to extend the output cuts through to the end of year. Now, yesterday, my colleague Angeline Ong caught up with the former BP Group Chief Executive, Bob Dudley, in a context of high interest rates and uncertainties regarding growth on both sides of the Atlantic and in China. Angeline asked Mr. Dudley, is a stabilisation or even a correction in oil prices, could that be on the cards, bearing in mind the interest rate picture we have at the moment?
I think it is possible. I mean, again, you get the whole gamut of views about whether there's recessions or not there. I think people are saying less of a recession in the United States now, but potential in some countries in Europe and even in China. So you're right. Some people say we've already peaked at interest rates. I'm not sure. I think we can still see some interest rate increases. We're certainly near the top on that. And all of those things change consumer spending and demand as well. So this is what moderates my view about a big price spike going upwards.
Former BP Chief Executive Bob Dudley talking to IGTV yesterday. Second update on what's happening in other markets. Gold continues to feel the pressure as the dollar continues to rise. This is gold in dollars, of course, which means that if you are in other currencies, it means that the price is going up. 1818 in dollars, not too far away from this line of support at 1804, which has been our price target on the early morning call. You get a candle close below there. Next price target is all the way down here at 1726. Just wanted to show you as well what's been happening in the base metals market. We've got a significant drop over the last few days for the price of copper, now trading below the 80,000 level, sorry, 8,000 level. 79.37 is where we're trading at the moment. very close to this line of support at 78.66. And then if you get a candle close below there, continuation of the short trade would seem to be the case. That is it from me. We're back at 10:30 with Chart in the Markets. Watch out for Topps Tiles and Tesco at the start of the day's trade. Both stocks looking pretty good in what is otherwise a down market expected to start, not just here in London, but across Europe.